Hello, everyone. Welcome to this panel on VC. I am Amy Lewin. I'm Deputy Editor of Sifted, which, if you haven't heard of us, we are a media platform that covers startups and tech in Europe. So please check us out. We have lots of newsletters and interesting stories about founders and kind of how to get into starting companies and also into VC. And we'll be talking about both of those things with a very excellent panel today. So we've got Eileen Burbidge, who is a partner at Passion Capital and an investor in companies you may have heard of, like Monzo, Go Cardless, Tide, and Button Up Box are the few that I picked out from their website. And we have Alice Bentinck, who is the co-founder of Entrepreneur First. I think the phrase is talent first investor, but it's the place where you can go to find a co-founder and start a very interesting business. One of their companies that was created at Entrepreneur First is Accurex, which sent me a text 2 weeks ago to go and get my COVID vaccine. So very grateful for many things that have come out of Entrepreneur First. So today we're going to take questions throughout. So if you have any burning questions for Eileen or Alice, please put them in the chat and I'll try and filter through them as well as I can. Please make them kind of not super specific to just you, but of use to everyone listening. But yeah. And I'll just start asking some questions now, but do ask them yourself as well, because we want to make this super useful. So maybe let's start off with Alice and Eileen, if you can talk us through. You're obviously like slightly different kinds of investors. So Alice, for anyone who doesn't kind of already know of EF and understand what you guys do, why don't you just talk us through your kind of slightly unusual model of company creation?
Yeah, sure. Well, hello, everyone. And it's so great to be here and to see so many, there's like more than 1,500 people watching. Absolutely incredible. So at Entrepreneur First, we are a talent investor, which means when you think of kind of seed stage capital or even an accelerator, we're the stage before that. So to get investment from EF, the kind of first stipend that we pay you, you don't need anything. You don't need a team. You don't need an idea. If you have an idea, that's kind of interesting, but we basically select you just on your founder potential. So when you go through our interview process, we want to know about what you've done in the past. We want to know about your different behaviors and abilities, because we're selecting you, not selecting an idea. We then have a 8-week program that helps you find a co-founder. You join with 100 other individuals and have the opportunity to experiment with different co-founding teams. And then you get pitched to our investment committee for further funding. We run across 6 locations across North America, Europe, and Asia, and we've been doing this for a decade now. And I think when we first started, it was seen as a pretty weird thing to do. But I suppose the reason that we started was really to work with people like you. We know that there is amazing talent in our universities across Europe, but largely because of cultural norms and just because of where you're based. Often students end up in banking, big tech corporates, consulting, law, careers that I think, 10, 15 years ago were the kind of cultural norm. And I suppose we're here to say you don't have to do that. We believe you have the potential to start a company straight out of university, and we can support you to do that.
Amazing. And Eileen, what kind of, you're investing the more kind of conventional route where people have found their true love startup founding partner in some other way. But what kind of stage are you looking to first meet founders at?
Yeah, so actually, I think we're probably interested in meeting them at the same point that Alice and her team want to meet them. So we want to meet them as early as possible. And I don't know, actually, to your point, I don't know if they've found their perfect sort of co-founding team by the time we've talked to them, but they have the biggest difference, I would say, is that they are seizing on a proposition or an opportunity. They've got an idea. But I would say easily half of the teams we backed don't have complete co-founding teams. And a lot of people are still looking for a co-founder or somebody else to add to the 1 or 2 or 3 people that have already come together. And maybe there's just one more they want to add to that team. So we're not necessarily looking for the complete set of people. We are interested in at least 1 or 2 that have really strong conviction about a particular segment, a particular proposition and a solution that they want to bring to market. And we're really pleased, actually, that we have co-invested with EF so many times. We love the program and we love the cohorts and the companies that come out of them. We've invested sometimes before companies have chosen to kind of go through EF, maybe to just do a pivot or to validate what they're working on as a team, as they've just come together. We obviously have invested after companies have come through EF, and even companies while they're going through EF, maybe even before Exam Day. So we're absolutely happy to work with EF cohorts in any way, shape, or form.
And we love working with you guys.
Isn't this lovely?
Group hug.
Is it kind of harder in a way for maybe people who've just graduated, you know, no matter what age they are, I guess, if someone hasn't had kind of professional experience, hasn't maybe worked at a startup or done the banking, McKinsey, whatever kind of route, you know, do you need to see like a bit more to invest in those founders? Or I guess kind of what could help someone who's listening now, who's going to graduate this summer, convince you that you should invest in them in 8 months' time?
Do you want to go first, Alice, or should I take a crack?
You go first and I'll go next.
Okay, so I can say silly stuff and then Alice can correct it, and then everyone remembers the sensible stuff. I mean, I think that's actually a really good question, Amy, because there's an argument for both. One argument would be, yes, actually getting some experience at an organization, no matter the variety or the type, is super useful, because I think coming out of academia, it's really good to understand a little bit about organizational behavior and how people function in teams, how people measure, performance of themselves, but also of their peers and, people around them, what they like in strong managers, what they don't like, what works for them, what doesn't. And I think that does benefit people, just, as individuals. It therefore makes it easier for them to understand maybe how to better motivate that they're going to be working with, and it just increases self-awareness. On the other hand, getting maybe too much bias from existing industries and companies can be a bit of a limiting factor, right? We don't want people to see the same restrictions, the same barriers that incumbents or existing companies have, because the whole point about doing something truly innovative means you hopefully don't see quite as many boundaries, and you're going to be thinking outside of those traditional boxes. So my answer is a really, really hedged position where I'm sitting on the wall. And I think it could be either, is I guess what I'm gonna say. So we don't apply a rule of thumb where we're not looking for one or the other. We're not gonna be filtering. But I actually think the best sort of answer or combination to invest in would be a co-founding team that embodies both. So maybe one of the co-founders is straight from academia and is anything is possible. All the other companies have been doing it the wrong way. This is how we're gonna do it. And somebody who's, just as empowered and just as strong a part of that team on the other sort of side of the table, saying, well, we've got to remember that other people might see it this way or something like this. And I really think this comes to another topic about, diversity of thought. You probably want the best of both worlds.
I mean, I'm just going to agree basically with what Eileen said. So when we started Entrepreneur First, we started as a pure graduate scheme. So you had to be within 2 years of graduating. And then over the last 10 years, we've tested basically every age range or every level of experience. What we've realized now is if you look at those 3,000 people, the ones, or the group that seems to have the greatest success are those that are within 6 years of graduating, or 2 years within graduating from a PhD. I think it's a really interesting sweet spot that basically talks to what Eileen was saying, where you have enough exposure to the world to understand you've been managed, you have a better view about how to be a manager, you understand what customers want, you have to know how to bring a product to market, but you haven't got entrenched in these sort of very old ways of working. You haven't bought into the industry and become one of them, become the status quo. One of the things I would say is that I think often consulting seems like a great way to get lots and lots of experience before becoming a founder. That's what I did. I left university, I went to McKinsey, spent 2 years there. It was great. But what I would say is many of the professional services firms, if you think about what a professional services firm is doing, it's often helping a company balance risk, and it's often quite a risk-averse profession. I would encourage you to go into a startup straight after university. So reject the big fancy names on your CV, reject the Google or the Facebook where you're going to be a cog in this giant machine, and instead go to an early stage startup, work alongside founders who are going to teach you exactly what it's like. So if you want to be a founder, learn from a founder. A partner at a consulting firm is not going to teach you how to be a good founder.
Good advice. On that note, Sifted is hiring. I'll be sharing some links in a little bit. But in very interesting points. But as you said, if you become a founder kind of straight out of uni, you haven't seen how organizations work, you haven't been managed, you haven't seen what good and bad management maybe is, and the people stuff is often like one of the very, very hardest things with startups. So what are some of the things you see with founders who've maybe started their company with not very much professional experience? Where are their kind of shortcomings or areas where they have to kind of learn more than other people? So maybe anyone listening to this just has that in the back of their mind for if that's them in a few years' time. Alice?
So many of our kind of most exciting startups are built by founders straight out of university. One of the things I would say is it takes them a little bit longer. There's usually a slightly messier period at the beginning where everyone's trying to work out what the hell they're doing. But the company that you mentioned, Amy, Accurix, that was founded by the CTO. Lawrence was straight out of university. Jacob had about 18 months of experience working in a med tech consultancy. So really like very, very little experience. Accurix now is in 95% of GP practices. They deal with about 1 million messages a week. Like it's just grown insanely fast. But that company is now 6 years old. So it's taken a while to get there, but now they're really dominating that market. I suppose what we see with these very inexperienced or kind of fresh out of academia founders is the ones that win have a growth mindset. They understand that they don't know everything, and they are willing to have the humility to learn from others. So they're very happy to get that kind of very strong board of advisors around them. They choose their investors carefully. It's very easy to raise money. Like anyone can raise money. It's just, who do you raise money from? You want to raise money from Eileen. You don't want to raise money from the person who's offering you what seems like great terms, but actually they're taking half the company and are going to tell you what to do. So like, choose your investors very carefully, choose your advisory, your mentors very, very carefully, and understand that you have to be in learning mode constantly. The personal development that you have to go through is just insane. If you can do that, you'll do great. I think some of the individuals on EF who have come straight out of university, who I thought were insanely smart and often were working on absolutely brilliant technology, but they were scared to have the vulnerability to say, sorry, I don't know how to do this. And pretty much all of them have failed. I mean, they all have failed. So you have to have this kind of vulnerability, this growth mindset to say, cool, I don't know what I'm doing. I'm going to surround myself by people who do, and I'm going to learn.
Eileen, anything you kind of particularly noticed amongst the less experienced in the world of work founders?
No, I mean, I think everything Alice said is bang on. I thought it was really interesting. I'm probably going to steal it from Alice, for her to describe it as sort of having that vulnerability. I've probably too euphemistically us just talked about it as sort of self-awareness, but obviously it's almost impossible to be self-aware about things that you're not self-aware about. So it's a bit of a problem. But vulnerability is much more accurate because it says, you're willing to sort of be slightly insecure and question and say, wait, hang on. And that's probably the prompt that gets us to be more self-aware. But I do think that is what, people can struggle with if they have less of that sort of professional work experience, because frankly, they haven't had feedback in any kind of setting, really. I mean, they've had, exams marked, and they've submitted papers, and they've gotten, marks from school, but they haven't had feedback from peers. They haven't had feedback from managers, whether it was good or bad and well delivered or not. And so that just means the amount of self-awareness is really, really limited. And I think, exactly as Alice was saying, you need to, I think, be willing to surround yourself with people who will be honest with you, and who will help complement, what you are sort of really strong at.
Is there anyone who, I mean, Alice, you've kind of become experts, I guess, at this. Are there anyone listening who just, if they have certain kind of characteristics or attributes, just outright should probably never start a company and go and work for a startup instead, because they will, find being a founder horrendous and stressful and not, the thing for them?
Oh, I don't know where my picture's gone. Has my face?
We have a lovely profile picture of your live face, but we can hear you fine.
Okay, I'm not entirely sure what's happened, so I will answer. And then, so the question was, if they, what characteristics mean you shouldn't be a founder?
Yeah, is there any this is just not going to be the lifestyle for you?
Oh, interesting. I suppose we look for positive characteristics, so it's rare that we think about it in the kind of opposite. I suppose if you're looking for stability, if you're looking for wealth, if you're looking to make a quick buck, if you're looking for immediate prestige, like just don't become a founder. The early days of being a founder are going to be slogging out, doing something that no one cares about, while all your friends are like doing all these like fancy, corporate company holidays, and they've got, the Swish corner office or whatever it is, and you're going to be working on something that your friends think is crazy, your family think is crazy, everyone doesn't understand why you turned down that job in a hedge fund. And you've got to be okay with that. And I think lots of people actually aren't. I think lots of people are more status conscious than they would like to admit. So really, as a founder, you've got to be prepared for at least a couple of years, if not many years, of really hard work before you become an overnight success. Every overnight success has about a decade of hard work behind it. So you've got to be ready for that. Largely what we just did a review recently of all the data that we have on the last 10 years of almost 100,000 applications. And one of the things that we see very clearly is the kind of people that make the best founders have been doing weird, amazing, incredible stuff all their life. It's not like suddenly they're like, oh, right, I'm going to be a founder. Now I'm going to do incredible things. Thinking about an applicant that I met recently who had been on part of the British Olympic athletic squad, was preparing for the Olympics while doing his A-levels, then got an injury, and then he had to drop out of that, aced his A-levels, went to Imperial, was top of his year at physics in Imperial. While he was doing that, he also got a electronic dance music track sampled by Neo, one of the largest artists in the world, got signed up by a record company. And we were just like, this guy has just done extraordinary stuff throughout his life. And those are the kind of people that we like to back. They've shown already that they're out there doing things that are unusual, they challenge convention, they have this kind of outlier behavior. So if you haven't already been doing this stuff, I suppose I would ask the question, why now? What's going to change that means you'll suddenly be a founder?
Yeah, and I would add, I think that's really fair. And like Alice, it's interesting. It's a great question because we always spend time thinking about the other way. What are we looking for? Not what would we, not recommend against, but what would we sort of think is probably not a good characteristic. I think, as Alice was saying, if someone isn't really willing to work hard or isn't used to maybe, demonstrating a really strong work ethic, I do think that would be a bit of a flag or a bit of a warning. Similarly, I think somebody has to be willing to be able to cope with bad news or, not always having everything go their way. And so how people, react to adversity, how people react to challenges, whether they seize that, whether it just gets them more fired up or if it actually dampens them, I think that's actually a big indicator. I also think there are different types of people who think about, how much they can control and what they can do or what's in their control. And a lot of other people who, and this kind of goes down to self-awareness, so it's probably hard to recognize it about oneself. But, I think we all know other people who, if you ask them how things are going and how they're feeling, they will almost always respond about how other things are affecting them. How, oh, well, this is happening with the government, this is happening with my company, this is what's happening with my job, and everything's always it's not the third person because it is the first person, but it's how other things are affecting them versus, oh, I'm feeling amazing because I did this today and I was doing that and I was doing. So I think that somebody who sees the world very often in the first context where how things affect them, I think probably wouldn't make the strongest founder. I think it has to be somebody who's very self-driven, believes that they can control or are responsible for what they achieve and how they're going to feel about that, are then really open to, constructive criticism from time to time, know, what to take personally if it has to be very personal feedback, but know what not to take personally. And it's just actually meant about the proposition or the company or the team. And as Alice said, are just really willing to dig in because as much as maybe Hollywood or TV serials or Netflix series will make it look really interesting and exotic and exciting and fun, there's just a lot of hard slog. There really is. Like Alice said, there'll be times when no one cares, and not even no one else cares. No one wants to hear about it. You're going to be obsessive and talking about something, and everyone else might just be like, we've heard enough about it, and we don't really want to switch in or tune into this right now. And to be able to persevere through that is incredibly important.
Good advice. It is. From my perspective, interviewing many founders over many years, there are a lot of non-fun bits as well, and it is hard. To talk a bit more about kind of the industries and the type of businesses rather than founders, got a question from Daniel Smith, which is, from an investor perspective, do you get more excited about companies that are paving the way by defining a completely new market, or by companies which are disrupting existing markets by creating an alternative product or service? Is one of those routes generally more successful than another? Eileen, do you want to go first?
Yeah, sure. So I'm going to do what I did before, which is awful. You're going to hate it as a moderator, Amy, and everyone listening is probably just going to cringe. But I'm going to sit on the fence again, because I don't think it's one or the other in the way that Daniel described it, even though I understand he was sort of trying to tease out our viewpoints. Because I think that even the first scenario that he mentioned, which was someone who's paving a brand new way, my sense is even doing that is usually in reaction to what exists today, the status quo. The idea for that would have come from saying there's got to be a better way to do something, in brackets, and then that is either something that sounds completely different than how people are already addressing it, or it's an iteration or an improvement over how people are doing it. So it might look completely disruptive, completely transformational and different, but it is still reacting to what exists today in our status quo. And so I think that it's going to be a blend of both. And to the last point of your question, which has been more successful, I don't think there's been an answer to that. I really think the success criteria depends, of course, on the original proposition or the size of that market that's being addressed, but also simply in how well the team executes. That's usually what defines success for all of the businesses that we end up investing in. You could have 10 teams that come up with the exact same idea, whether it was just iterating on an existing product or completely different and paving a new way. And you'll have 10 different outcomes into sort of how they go. And that is just based on the executional ability of that team.
Alice, do people who join EF tend to go one way or another? Are they trying to completely do something different, or are they often kind of trying to tweak what's already there?
I do agree with Eileen on this one, that I think it's quite hard to separate out the two. I mean, if you think about something like Airbnb, for example, so Airbnb, they were doing something totally different, creating this new market of air beds in people's houses. But actually now they're the most valuable hotel company in the world without actually having any hotels. So I think it's maybe a false dichotomy. I think the question that I like, Daniel, is that you are asking about markets. And I think this is one of the mistakes that we see founders make, is not having enough curiosity about which are the right markets to go into. There's a really famous quote from Andy Ratcliffe, who's one of the founders of Benchmark Capital, one of the kind of godfathers of grandfathers of venture capital, which is, and I'm probably going to mess it up a bit, but great market, lousy team, market wins. The market you'll probably still be successful. Great team, lousy market, market wins. The great team cannot make it successful. And so really what you're looking for is to be a great team in a great market, and then something really special happens. So market dictates outcomes way more than founders realize. And I suppose one of the things that I see, particularly with student entrepreneurs, is often student entrepreneurs getting very excited about hardware markets. So markets where they're trying to produce a physical product. There are some amazing companies out there that produce physical products. But I would encourage you to only do that if you are one of the very, very best people in the world to do that. You have a particular speciality in a particular area of technology that is rare and valuable. Otherwise, why hardware market's tough? Well, the margins suck. And actually just bringing it to market has so much operational complexity that if you're looking to try and build a valuable company, it will be easier and probably give you a better financial outcome to build a software company than a hardware company. That's a very sort of basic example, but I think this idea of thinking about markets from day one, and a market that will ideally you do want to go after a market that has lots of room to grow, so it can be small, but one that you believe you can vastly increase the value in that market. So thinking about markets from day one, I would strongly encourage.
And of your recent cohorts, Alice, and I guess Eileen, are there any kind of trends you're seeing at the moment? Is everyone, everyone's been through the past year, so everyone's trying to do video conferencing or med tech, or what are the kind of zeitgeisty sectors at the moment, and which ones are you actually most interested in?
So one of the exciting things about the last year has been a bunch of markets that we've previously been quite short on, I think are now seeing a real resurgence. So it is what you would expect. We've had a bunch of video conferencing companies and sort of, alternative ways to meet and socialize online, but also edtech. Edtech suddenly is now seeing a big resurgence where, and medtech. So if you think about one of the reasons that we didn't like edtech and medtech particularly, although we've actually done a huge number of medtech investments, is that it's been a very hard market to crack. The openness of your customer and their willingness and ability to embed new products into their existing systems has been very, very low. That's all changed because of the pandemic. So there is a kind of an opportunity there to create a new normal and to really kind of improve the way that these systems, these markets work. So I would say that medtech, edtech, and remote working, we have seen a bunch of interesting stuff around. We've even just backed our first food delivery company. We've always been very short on food delivery, but we've got a company called Dishpatch that does delivery from restaurants all around the UK, and they're just seeing absolutely insane growth. Now, 2 years ago, would we have backed that? No, the why now wasn't there. But every great company has a good why now about why it should exist. And for Dishpatch, the change in people's ability to go to restaurants and the change in kind of how they can socialize has enabled their kind of crazy growth over the last 6 months.
So not too much to add there. I totally agree, obviously, on the event platforming and sort of communication, I guess, more broadly. And I think, other investors that were very thematic would have described this as like the future of work or the future of collaboration. And obviously that's been a sector that people have looked at in terms of productivity for years and years. But certainly the last year and a half has really, really accelerated that. We've also, like Alice mentioned, seen a lot of things that are looking to try and make e-commerce more efficient as well. So like the last company Alice was talking about, but I think, with whether you want to call them dark kitchens or dark stores, I think lots of people are just trying to make that whole process, the last mile and delivery, much more efficient. Agree with Alice on edtech. It's been really interesting. I think the reason for that is because procurement has changed just because of how everyone has had to react, as an organization to what's happened with the pandemic. And then I think I wouldn't say there's been anything else that's really new. Obviously, you'll have seen a dampening, I think, in investing in travel, in hospitality, more broadly. But what we are seeing is how to make the back end or the supply chain more efficient for all sectors, even hospitality and events, for example.
Interesting. And then the other, I guess, big change that has come is the B word, Brexit. How is that actually affecting, I guess, London in particular? And then what knock-on effect are you seeing, or do you think that will have on the European startup ecosystem? Has it been over or under kind of played the impact?
Should I go? So this is interesting. Again, I'll be controversial, Alice. You can sort of be diplomatic and sort of pick it up at the end. I think that actually Amy and we talked about this really briefly on another panel earlier in the week. I think that I have a personal view about Brexit. I think it's a shame about how much time and distraction it took, for example, even if one were to say that was the right position politically for, the UK to be in, or, just what one thought about European Union membership. The process that we have gone through the last 2.5, 3 years has just been, I think, really, really debilitating for the ecosystem. And I just think it's just happened in such a way where the uncertainty built up so greatly that there is a massive opportunity cost, I think, for that. So given that particular slice of how to look at Brexit, I'm not even going to go into sort of policies or just the sort of reasons why. Even if you just look at that one aspect or one facet of it, we, in theory, should be in a better place now because the uncertainty should be coming down now. So we kind of hit peak uncertainty and now we should be coming down. There's still much more detail to come. And I think obviously we're going to see a lot more in the budget, and you're going to see a lot more sort of coming out in future months. You have different rumors about whether or not we'll have regulatory equivalents for financial services still coming out. Obviously, different industries are all waiting for very specific measures to get sort of netted out. But we should be getting to a point where we're at a state where there's greater certainty. And I think that alone is going to help. certainly to the extent that the government, is able to support, more visa routes, which it sounds like it's wanting to do, or there are certain reviews that are landing that are encouraging the government to do that, that'll help the ecosystem. It doesn't feel yet that, venture investors have left London in droves or anything like that. So it does feel like there's still a lot of investor sentiment and interest in the UK market. So then I think the big challenge that I haven't talked about, if you talk about uncertainty, policies, regulation, financing, capital, then the last point is talent. And I said, if we open up visa routes, that'll be good as well. But whether or not we can create a positive sentiment about the UK after the last few years, where the noise and the tone from the country has maybe not particularly been the most inclusive or, one to sort of attract people from other places, whether we can sort of improve that. Big factor. And then, of course, getting the economy back on track and then helping to develop homegrown talent as well. So I guess that's 4 areas. Sorry.
Alice, is London still the place to be in the European ecosystem? Or, if any students listening are considering their next move, which other startup ecosystems should they be seriously having a look into?
So in Europe, we're in London, Paris, and Berlin, and it's really interesting to see the kind of similarities and differences in the ecosystems. London still does have the greatest depth and breadth of venture capital, and I still think is a really exciting place to build a startup. One of the things that I think London has that is particularly great, and there is actually a similarity with Paris here, is just the quality of the universities in easy reach of London means that the ability to hire fantastic talent at a pretty decent price when you think about what US startups have to pay, it is still there. So I'm still pretty long on London. I think we're still seeing very punchy valuations for our UK and London-based startups. We're still seeing a real quantity and quality of capital. The ecosystem I would give a shout out to, though, is Paris. I think what's happening there is super exciting. It's not just hype, it's lots of very, very talented people moving from more traditional roles into the startup ecosystem. And you're beginning to see more and more venture capital building up around that as well. So I'm very long on London. I think Brexit has been, as Eileen was saying, sort of debilitating, and I hope that it hasn't permanently turned off the rest of Europe on London and the UK. But I think we will weather this particular storm. We've been supporting the government on visa stuff for many years, and actually think the new visa proposals that they're outlining for kind of post-Brexit actually look very positive for the tech industry, and particularly for taking highly talented or bringing in highly talented technical individuals from wherever they are in the world. So I think it's been a major distraction, but I still think London is the most mature and kind of deep ecosystem in Europe.
Amazing. On the subject of talent, I've got a question from Ashna, which is she's currently deciding whether to do a master's. Is it worth doing a master's for people who want to become entrepreneurs, or is that kind of by the by? Career advice, Eileen.
That is a hard question to answer, and I'm such a bad person to answer it. I think I would, and again, hedge and say it depends on sort of personal situations. I think in circumstances, what is it that you're considering to pursue for your master's? How much more depth do you think it'll bring to what you might want to spend your time doing after that? Will it help you develop more contacts or sort of a wider network that you're going to be able to rely on to support you? That if those answers are resounding yeses, then a further year of education to me doesn't sound like that's a bad investment, especially if it's going to expand your networks and the sort of resources that you'll want to call on when you are an entrepreneur. I think that's invaluable. Having said that, the market's really hot. And so again, depending on what sector, what area, what your proposition is, how close you feel that you could be to getting something going, whether or not you've got a team, I don't know what the opportunity cost is, I guess is what I'm saying. Without knowing that, and even if you were to say all things were equal, like, oh, I could start this business now, or I could go get my master's and then start the same business in a year, I would have thought you're probably going to be further developed or further refined having done the master's, but then again, you might actually do better doing something like EF. So it's really hard for me to answer that question without knowing more personal circumstances, but that's my best shot at it. I don't know what Alice would say.
Again, it's this is the sort of thing that probably needs a one-to-one rather than a high-level conversation. I suppose if you are technical, do the masters. If you're and do a master's in a technical subject. If you are not technical, say you've got a business degree, I would probably, if you're going to do a master's, I'd maybe think about doing a technical master's. So can you do a computer science conversion course? We've taken some really fantastic people from Imperial, having done their computer science conversion course, which I know is very highly rated. If you aren't technical, I would maybe encourage you to go and work in a startup, go and intern in a startup instead, if you want to get into startups. I'm probably slightly bearish on the value of more non-technical education. I think ultimately the stuff that you will learn by doing it in practice will probably be more valuable, and pretty short on MBAs as well. So yeah, if you're technical, I think actually more education is usually better. It means you can refine your skills, become more specialized, really build up knowledge about something that is more rare and valuable. If you're non-technical, I'd probably err on not doing it, or doing a technical conversion course.
Amazing. Also, a question from Jay. He's been introduced to a lot of incubators and accelerators across Europe during the course of this conference. How can he tell which ones are any good? Eileen?
I think the best bet would be, well, Entrepreneur First is the best one. But then aside from that, I would say talk to founders that have been through them, because they will tell you. And, talk to ones that you wouldn't describe as successful, and you'll find out sort of what support they were lent, whether or not they thought it was a useful use of their time, whether or not the advice that they got was valuable. Obviously, there's the economics as well, but that's the only way one can tell, I think, is people who have been through it. What do you tell people, Alice?
Yeah, I mean, the very similar. The accelerator market has tried to sort of refine itself over the last couple of years, and so you've got a real variety of different products now, whereas before it was kind of like, cool, you get 12 weeks to get ready for a demo day, and then you do the demo day, whereas now you see really different products, either like focused on growth, or focused on, we're focused on individuals, or focused on preparing for your Series A. Or so I would understand what product you are buying. There's no reason to kind of do an accelerator for an accelerator's sake. They're really expensive. If you can get Eileen's money without going to an accelerator, do that. That is way, way cheaper. So think about what product you're buying. Like, what do you want to get from this accelerator? If you don't have a co-founder and you want to find a co-founder, Entrepreneur First really is one of the very few places in the world that can help you do that. But yes, you have to pay for it, and you pay for it in equity, and that's the same for any accelerator you go for. But if you're just looking to raise a seed round, I think I'd question what do you want to get from this accelerator that you wouldn't be able to get doing it by yourself. Like, there is a cost. I think sometimes people are very happy to give up equity just to get the badge of YC or Techstars or whatever it may be, but that badge comes at a price. So just make sure you know what you're buying.
Interesting. Got another question from Daniel, from the same Daniel as earlier. He says, what's kind of led to the growth of I guess venture capital firms going down the venture builder or like startup studio approach? Like, where's that come from? There's a few kind of around that kind of incubate startups and then send them on their way. Like, where's that come from, Eileen?
So I actually think the concept is probably one that's been around for a long time. You may or may not have heard venture capital investors talk about having EIRs, or entrepreneurs in residence. And that would have been really similar, which is, working really closely with somebody who was going to found something new, haven't maybe decided on it or sort of worked out the exacts of it, and they sort of work alongside the investor to do that. And then, of course, that investor ends up being the first investor. That's really the same concept, I think, of venture builders and startup studios. It's just doing it at a slightly bigger scale. And so for me, I think the difference and the reason why you're seeing more of it, and also it being branded as such and trying to attract more builders to work with investors, is because we have more talented people who have gone through previous operational experiences that have given them wisdom or interest or ambition to want to do this again. And so it's just, we've got a bigger pool. And I think we have also more investors who are willing to take these super early bets to try and be the first investor or the first person on the cap table in order to support founders doing that. That would be my sort of read of it. Again, I don't know if Alice has a different view.
No, I think very, very similar. And I mean, one thing to remember as well is, venture capital is a business model, and everyone is trying to make money in their own way, and you need to differentiate. And there hasn't been a huge amount of, there's this old adage of like, venture capital loves disruption in every industry apart from venture capital. But actually, I think what's really exciting is we are seeing lots of different approaches to deploying money in different ways. I think the exciting thing is that we're seeing more and more funds compete to give better services to founders. So it's not just about capital, it's about what services can you overlay on top of that, and whether it's an accelerator or whether it's a studio or whether it's a more traditional VC. I think these changes are very, very positive for founders, because you're basically seeing VCs come up with products alongside just money. So I think it's a really positive shift for founders. And I suppose going back to my previous point, you need to work out which venture capital product is right for you.
And so what, for people who are approaching the scary VCs, how can they watch out for like the absolute sharks? How, again, can you find out? I assume one of the bits of advice is obviously speak to people who've been invested in by those investors, but what should people look out for in an investor, and how can they make sure they basically don't get screwed over?
Such a great question. And I think there have been lots of attempts to try and, bring transparency to this. And as you say, though, I think the only way is to talk to people who have worked with those people before. So even before that, I would say one thing: if you're talking about venture capital funds, my experience, even with working with them as co-investors or as follow-on investors, is that a fund isn't just a fund, it's actually a composition of partners. And individual partners, even within the same fund, can have very, very different behaviors and personalities and sort of ways of going about what they do. So I wouldn't actually make a judgment based on a firm or a fund or a name. I would actually base it on the name of an individual and the specific GP or the general partner that one would be working with, or who somebody is pitching. And then, yes, I would talk to founders who have taken money from that general partner before. And you want to have a mix of people who have had success stories, as we would all think of them as, and then people who maybe, the company had to wind down. Because my feeling is that you learn the most about investors when things aren't going really well, and how they react to a situation where the company is having a lot of trouble or is coming into challenging times. And you do have to do your homework. I think you really, really do. You can't just rely on, social media or reputation. You really need to talk to people that you can trust, who might have had firsthand experience in working with them.
Yeah, strongly agree on that. Do your due diligence. I suppose what we've seen a little bit of, particularly around students, is in the UK, the SEIS tax break means that there are some funds out there that are basically sort of financial instruments to enable people to use that tax break, and they look really shiny. And to be totally honest, we sometimes find our logo on those companies' websites. And they have absolutely no right to use our logo. They say that they work with our companies. They don't. These are the really kind of sharky ones. But to be honest, they look exactly like, it looks like the EF website or the Passion website. Like it looks legit. So as Eileen was saying, do your due diligence, really, really understand who you are going to be working with, because having one of those investors on your cap table can make your life very, very difficult. You want to work with people who, the best funds have experienced GPs that have worked with lots of companies that maybe have been operators themselves, and that they should have good reputations. It's a people business ultimately. So whoever you have as your investor, you'll be working with for quite some time. So make sure you know who you're going to be working with.
Yeah, there's also now an interesting new platform called Landscape, which reviews investors. They're worth following on Twitter. They kind of give like 3.9 out of 5. But then also quotes about the kind of partners, or things like, they didn't invest in us, but they gave us really great feedback and they replied quickly. And so, Landscape as an organization is trying to basically bring some of this transparency to the industry. So I think that's one to watch. Let's move on to talk about anyone who wants to actually go to the dark side and become an investor rather than a founder. Where do you start? It's not, there aren't heaps and heaps of kind of VC internship schemes and things. Like there's more starting up. But maybe Eileen, where would you, for someone who's like maybe not totally sure, but thinks being an investor, being a VC might be a path they want to go down, like where do they begin?
Yeah, I think this is a tough one because, as you say, there isn't a whole plethora of roles that turn over sort of every year. So first, I think it depends on what type of investment activity somebody's interested in doing. I think there's a really big difference in the skills to work on or to sort of rack up, depending on whether somebody is interested in late stage investing, growth stage investing, for example, private equity, or say early stage, pre-seed, seed stage. And so I think it depends on those two things. If one was trying to focus on seed stage or early stage investing, my advice is the best way in is actually to get operational experience first. And like Alice has said a couple of times when we've been talking about other topics, get experience at a startup, understand, what that life cycle is like, what the experience is going to be for founders and entrepreneurs, because that will then give you, empathy and the ability to relate to founders if you want to be an investor. And that is sort of our customer at the end of the day, our founder groups. And so having been on the other side, I think is hugely important to do early stage investing. If one wants to do late stage investing, then I think it's more of a traditional sort of banking route, probably, and to have really strong financial skills, analytical skills, and probably just understand, what defines growth or how to do valuation metrics and the like. But again, wouldn't hurt to get operational experience as well to recognize the business behind the numbers. And then I think, the best way is probably, especially as it's getting easier and easier to sort of participate, whether it's in rolling funds, crowdfunding. I wouldn't suggest anyone ever invest money that they're not prepared to lose, by the way, but if one could maybe do a sort of a side portfolio or a tracker portfolio, even where you're not actually investing real money, start to track companies that you would like to have been involved with if you're an investor, and just sort of, have a look to start assessing what you think is our strengths and weaknesses of different businesses or propositions might be a way to go about it as you're developing the other skills.
Alice, anything to add?
I strongly agree about getting operational experience. I suppose it depends kind of what sort of VC do you want to, why do you want to be an investor? What bit excites you? And there is still a world for the sort of banking consulting associate route into VC, and that if you want to be more on the financial modeling side of VC, that can be a useful skill set. But I suppose ultimately, I think the best VCs are those who have deep operational experience, either founding their own companies or in senior roles in fast-growing companies. So I would encourage you to go down that route. One thing that I think has been really interesting recently is there's been a big push by the venture capital industry to try and get more diversity. It's a reasonably it's an industry that struggles with diversity, as technology does in general. But Diversity VC has a Future VC internship that I would encourage you to check out, which is basically trying to open up VC and give a wider group of people exposure to the industry. So yeah, I agree, go operational, or if you are looking for an internship, do check out Diversity VC.
I've just put the link in the chat, and also there's another scheme called Included VC, which is another one trying to kind of get a different profile of people into investing. I'm going to ask the same question I did for the founders earlier. Who should not go into VC? And is this the route to, riches? Or is it not quite, they're not quite going to be driving fancy cars all that quickly? Eileen?
I do not think it's the route to riches. I think it's a very, very privileged position. It's a very privileged job. I'm no question about that. I think, we're really lucky, to be able to support our lifestyle or get a wage basically, or say salary out of fees in order to just assess, people's ideas and, what they want to spend their time doing, and then potentially to be investor partners. I think that is a position of great, great privilege, but it's not an easy path to, well, I mean, it can be, and I think we've probably all seen those stories, but a traditional venture fund is a 10-year fund life. Depending on how many companies one might invest in, it often takes, I think the average for a European 10-year fund is actually a 14-year fund life, because you end up extending in order to try and realize the exits, or just to liquidate the portfolio. Maybe somebody ends up with a really successful portfolio after 10, 14 years, and they get, some portion of the carried interest of that fund. It shouldn't be a quick, it's not a get rich quick scheme at all. And so that shouldn't be the motivating factor. So people who want to get into it in order to get rich fast, that's not the fastest way to do it. You'd be better off trading crypto. But other people who wouldn't want to, I think people who can't relate to people, again, because the audience of investors is the founders. And so you're going to try and compel founders to want to work with you. If that's something that, doesn't come very naturally to people, about talking about what they would bring to a table, to a conversation, or to a relationship, it's probably not a great place to be. If one doesn't believe in or buy, the fact that there'll be constant disruption or innovation, or that things will always change, or if people are always, frustrated that things aren't changing, or that things are changing too quickly, that might be a bit frustrating as well. But I think what else would I sort of put off from coming into venture? It isn't what it looks like, I think, on, Dragon's Den or Silicon Valley. It isn't what I think it's cracked up to be. It is a privileged job. It's a lot of fun. But a lot of it also is, monitoring companies, doing reporting, LP relationships, fundraising ourselves. So it's not just the kind of writing checks.
Oh, yes. Remember, VCs have to fundraise too. So they get that fun slog ahead of them as well. Alice, any kind of, don't think you should go into VC kind of red flags?
Well, one of the things that we often get asked, so we closed a $110 million fund last year, closed as in raised, and had quite a few sort of youngish early career people be like, cool, so we want to do the same, how do I do that? And one of the things I would say is, it takes a while to build your reputation in venture capital. So for 2 years, we ran EF without any fund at all. We then had enough results to raise £250,000. It wasn't even a fund, it was like an angel collective. Another year went by and we raised $1 million. Another year went by and then we raised 8 million. Another year went by, we raised 40 million. And it takes, we started EF when we were pretty young. I just turned 25. So if you are going into this industry young, and if you are aspiring to raise your own fund, just recognizing that you need to build up your reputation, you need to build up your skills and ability. And then, as Eileen was saying, you need to start building up your contacts and network on the LP side of things. And I think this is often forgotten about, is that venture capital has two sides. It's a marketplace to some extent, in that you're serving the founders, but you're also serving your LPs, and just building up a knowledge of what economics do LPs expect, what terms do LPs expect, who are the LPs that are good, etc., etc. There's a lot to learn. So I suppose my career in venture capital has been 10 years of going from absolutely nothing to having something that's reasonably sized, but it takes time. So I suppose you need patience and understanding that there's as much kind of hard graft in building a VC fund as there is in building an operational company.
Amazing. So I think we've probably got time for one more question, which is, you focused a lot on kind of basically it's a good idea to get operational expertise, whether you want to start a company, whether you want to join a VC, which are shout out to some really interesting companies in Europe that if someone's looking for a job where they're going to learn loads, be working on a potential rocket ship, get some nice options in that company, perhaps, which are some really interesting startups in Europe at the moment that people might want to have a look at their jobs board. And they can't all be portfolio companies of yours.
Oh.
Alice?
So Accurix, if you want to work on a product that actually all these companies are founded by people who are within 2 years of graduating, but they're all now sort of post Series A. So Accurix, if you want to work on really kind of transforming healthcare post pandemic. Tractable, if you find fintech exciting, they're one of the fastest growing insurance tech companies out there. Clio, if you're into fintech for millennials, they just closed a $44 million Series B. And then a non-portfolio one, Kuru Kids, which is an amazing startup looking at transforming how childcare is done.
Cool. Eileen?
Because my portfolio companies will probably be annoyed. I'm probably not going to give any specific ones to shout out, because if I did a handful, 4 or 5, then the others would probably ask why I didn't do theirs. All of ours are on our website. I think the good news is, in a way I'm going to dodge the question, Amy, is that anyone that Sifted covers is going to be good. Anyone that's in our portfolio, anyone that's gone through an EF cohort. But the point I would make is that there are hundreds of them now. And I think that's a very different position than if we were having this panel conversation, 5 or even 2 years ago, where there would be this list of, better companies to sort of focus on versus others. Now there are literally hundreds, and I think the activity is fantastic. And actually, sometimes, you learn the most instructive things from companies that really are going through challenging times. So they may not be the rocket ships like Amy, you described, and they may not end up paying out the best in options, but you'll find out what you wouldn't want to do then when you're an entrepreneur and if you're sort of at a startup that you're a founding member of. And so I just think the options are limitless. I would just, if one was going to look at joining a startup that hasn't gotten that buzz, that hasn't been covered by Sifted yet, or isn't in the Passion or EF portfolios, the things you want to ask are, how much runway does it have? How much capital is it in the bank? What is the sort of path to not necessarily profitability, but to sustainability? As in, is it going to need to raise for the next X number of years, or does it have a path to revenue and profitability sooner? You want to make sure the founder is someone that you really, really respect, you believe has high integrity, and therefore you'll feel comfortable challenging, but also learning from and growing with. And then, you'll learn so much from any of those experiences that you can't go wrong.
Yeah, I would 100% agree with that. I was Sifted's first employee. And if you don't quite feel ready for being a founder, if you want to be the first employee, you become chief happiness officer, chief recruiter, journalist, editor, manager, all sorts of corrupt stuff all at once. So if you get in there early as well, your job will continue to change, but you will learn a lot along the way. So if you're up for that, that's quite a good one. Thank you so much. We're out of time, but I feel like we have had so many useful insights here. I'm going to do a little Twitter thread of the highlights that I can remember afterwards. So thank you very much, Eileen. Thank you very much, Alice. Everyone, check out Passion's website, check out EF. And I hope you enjoy the rest of your sessions today. And obviously check out Sifted.
Thank you.
Thanks so much.
Thank you.
Bye-bye.
Bye.